Hey guys, I wanted to just make a very quick update to the ATM program. Again, following up the video that I made a couple of days ago, had a lot of good questions and comments coming in on the power of understanding the delta, the theta, and the extrinsic in our account, as well as the time frame that extrinsic is spread over, and how I utilize these to judge how we're doing when we are in a roll that seems to go into perpetuity, a roll that's just going and going and going, and you're delaying whatever the end result is, good, bad, or indifferent. You're delaying that result. How do you look at that and feel comfortable with that? So again, I just want to go through, we've had an options expiration weekend, talk about our positions here very, very quickly. AI looks really, really solid here. I'm very happy with that position. It's a small position, and oh, I had a little glitch there. It's a small position, and this is a position that I can probably add to and may add to, but very well positioned right now. Obviously an amazing ROI potential on there. AMD's hanging in there quite nicely. We're not out that far on it. Again, really, really strong on the extrinsic there. CRM is set to expire next week. That looks really solid. DDOG, we've got earnings coming up on DDOG. I don't really want to get into a ownership position, either short or long, on this right now at this moment. At these particular prices, at maybe a little bit higher price, I would be interested in a short position. But it looks really good right now. I don't think that we have to do too many more adjustments on that. FGen, we took an ownership position of a massive $210 position here. I think this is going to maybe be a buy and hold for me. A little bit of a speculative position, but it's only a couple $100 on that. Took an assignment there. IWM, you know the deal there. We continue to work that. I think it's been a very nice cash flow vehicle for us. But again, we look at the extrinsic on that and how far out we are, and we go, yeah, that's still pretty good trade. KHC, I've had the General Mills position, which I did want to take an assignment in, and the Kraft Heinz, the KHC position that I didn't want to take an assignment in. They both kind of escaped us. I'm going to put the General Mills back on and again try for another assignment on that. I prefer to get assigned on the General Mills than the KHC, so we'll continue to work that, but that is a trade that may need to work a little bit more. KRE continues to sort of hang in there, and we'll continue to work that for cash flow. Match has been a little bit of a challenging one, but from a risk perspective, it looks okay. We do have earnings coming up on it, but I'm pretty happy with where we're sitting in it right now. We'll see how earnings affect that and continue to work at NVIDIA. Lot of good moves in the AI stocks these last couple of days as the market, the fever, quote unquote fever in the market has broken, and these are coming right into line. I would love on some of these AI stocks to be chasing them on the downside, chasing them on the put side, and it looks like we're getting close there. On the NVIDIA one, we've got 146 days out on the call side, so I would be more than happy to run this put side out a little bit further as well. NVIDIA is our largest position right now, buying power wise, and so moving that out and down. I'll just grab something really quickly here and go out maybe 30 days, go out a month on it, and let's just see where it would take us, maybe even down to there. You can see that that brings back a ton, just an absolute ton of the buying power. So really, really happy with the price action that we've had in NVIDIA lately. Plug's hanging in there. It's got a week to go on that. PSQ will continue to work this as a cash flow vehicle. I do think that it is important at this point in the market to have something that benefits from the market falling, and that's what PSQ does. PSTG looks great, but may have to roll this out a little bit further, but right now it looks really good. Save, absolutely picture perfect. This is what we want in all of our positions. It's never going to happen because it's just too hard to go through all three stages of an in the money cover. Sell the call or the put at the right price, get assigned, cash flow it, get that cash flow position into in the money. It's just too many variables. It's an ideal situation. Trades don't get better than this. The save trade, again, we just absolutely love those. We are there now with the Charles Schwab. I know some of you guys have a lot bigger accounts than I do. My $67,000 account, and had a lot more shares of Schwab than I did. And I told y'all, you know what, you're going to be fine. and we're flying now in Schwab. We are in that exact same ideal situation where we are slightly in the money on our cover. We've got the put side there as well that's balancing the trade and giving us a little extra income, as well as being able to dollar cost average into some more shares should we drop down there. And on a $2,400 investment here, I've got a ton of cash flow coming in on the trade on a weekly basis. Now it works out just quite nicely. Probably $50 a week or so for me on my 100 shares, $200 a month on a $2,500 investment. What's not to like about the Schwab? Told you guys when we got into these. This is the challenge that we have with in the money trades and wanting to take an assignment on something is that you take an assignment on a put, and it is almost inevitably going to fall below your entry price, right? You take an assignment on a call, and it's almost inevitably going to go above your call strike price. But over time, it tends to work out quite nicely. Siri, I was really wanting to take a huge position in this, but we stayed inside of our position sizing rules. Three things happening with Siri. Number one, there's a Liberty Media hedge that was a tracking stock that was tied to Siri. That hedge failed. And then number two, we have the NASDAQ 100 rebalancing this weekend that affected Siri. And then probably more than anything, 36% short interest overall in Siri, and there was a short squeeze on it. All three of those things combined to push it up here. It's been up here before. I won't go back way into history on Siri stock, but it's been up at these levels before. It always is a nosebleeds level, and it comes back down. I would take a short position at 950 on Siri all day long. And I think over time, my only frustration with this trade on Siri is that we didn't take a bigger position. But we got to trade well, and position sizing is important there. SMCI, nice drawdown there as well. Again, we're seeing sort of the fever starting to crack in some of these. It's not as bad in SMCI as some of the other ones, maybe NVIDIA or so to speak, the other big AI stocks, but still very well positioned here. It is our second largest position here, and as we start coming down here, you can see we've got a negative delta here, saying that we would benefit from more of a downward move. I think if we can get that down just a little bit, we can balance that out. It might behoove us just to start. Our put leg is fine right now. It's out 13 days, and it's got $150 of extrinsic value in it, but it might benefit us, to roll that out a little bit further in time, and maybe even roll it down just a little bit. You can see that would dramatically affect our buying power as well. And again, we use this example up here on our big position, which is the NVIDIA one, for example. It's not always about the ROI, it's about your buying power. And if you can cut your buying power back down by 30%, obviously that affects directly your actual ROI on the trade. It doesn't affect your dollar return, but affects what the ROI on that trade is, right? Big lead issue going on with both Verizon and AT&T. I think it's overblown. I forget the numbers just off the top of my head. But I think it's a $4 billion hit. AT&T is estimating that it's going to be a $4 billion hit to their revenues, to their bottom line, to clean up the lead issue. And the stock has dropped by $22 billion. This happens quite a bit. Happened with Tylenol, happened with the Exxon Valdez. It happens with a lot of these companies where they have a liability hanging over their head, and it's almost always a nice arbitrage opportunity in the stock, because the stock usually gets hit from a cap level a lot harder than the actual dollar cost, dollar average, the dollar amount to the liabilities ends up being. So it's kind of accretive if you can jump in and arbitrage that opportunity. I think that we'll continue to work this quite nicely. This is a nice position. It's got an 8% dividend, and we're bringing in, that's probably pretty accurate for every 10 days, $80 every 10 days. So maybe $200 plus a month income wise on AT&T. It's a $2,100 position. I'm bringing in $200 a month in income, and we've got an 8% dividend, so that's $160 a year right there on top of that. Yeah, we're down right now, but I think it'll be a good cash flow position for us. TLT is a standard for us. We'll continue to work that. We had one leg expire. UNG continues to just cash flow for us as well. Strong position. And I like that we have things that are non-equity correlated, of course. Uranium is another one. Looks pretty solid here. UTF will probably continue to try to add to this. If this drops on us a little bit here, and we can get some better pricing, maybe down here in the $22 range, I'll take that. This is a trade that is not optionable on it, but it does have an 8% dividend as well. And I think that we could get this back up here to maybe the $25 level. So I think it's got, maybe 8% dividend potential in it, and maybe 10 to 12% upside in it as well. It's also a sort of safe haven in the marketplace. I'm trying to build some of those as the portfolio goes forward, as the market gets frothy and looks to turn down. XLE is the energy sector. We've had to work this trade a few times from time to time, but it's always been good to us. Looks like we might have to roll the call side out a little bit, and then ZM's been a strong one for us as well. So I just wanted to go through those positions, but the big thing that I wanted to talk about was, how do I feel? The question that I think is people sometimes ask me, or maybe are sometimes afraid to ask me, that's how do you feel about the ATM position? We've had 2 years of just absolutely kicking butt in this thing. Kind of feels like this last month, and it's really just been this last month. I know that we're myopic in our views, but if you go back just to the previous month, we were beating the market last month. At the end of last month, I mean, that's only 22 days ago, we were beating this market. Just barely. The market was up like 9.7%, and we were up like 10%, but we were beating the market, and now we're kind of sucking wind a little bit this month. Here's the thing that I would say, I started the year with about $63,000, and I'm up to almost $68,000 now. So $5,000 return on a $63,000 account. Let's just grab the calculator real quick and take a look at this. 5,000 divided by 63,000. We're basically halfway through the year. I'm at about 8% return. It's not bad. Obviously it annualizes out at 16% a year. I think a lot of people would be happy with that, but it doesn't compare very well. This 8% right here doesn't compare very well to the 18.74% that the S&P is up right now. So how do I feel about it? You know what? I feel awesome. I absolutely feel awesome. Here's a couple of things just to mention again, and it comes back to these numbers right here. Number one, I will tell you that we are just absolutely positively never, ever, 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 unless we just get into a lucky position, going to outperform the market when it is up on an annualized basis of 40% a year. It's up almost 20% through the first 6 months. We're never going to keep pace with that, and we don't want to. The reason that we can't, the reason that we don't, is because we always have something that benefits us to the downside. You can see that the delta in our portfolio, and that's the first thing again that I want to hit on, the delta of our portfolio is negative. That means that this overall portfolio benefits if the market goes down. And it will almost always, you'll notice that we almost always have a negative delta in this portfolio. So the question that we get so often, well, what's going to happen if the market goes down? This should answer that question. We are designed to trade a strategy and approach that has less risk than the market, not more risk. We can take Siri trades all day long. This is a trade that I put up $2,500 to bring in $300 in half a month's period of time. That's 100% plus return in 2 weeks. You go out to a month and it's a 200% return. We can do trades. We can build trades all day long that have the opportunity to make 200% a year, 240%, or 200% a month, 240% a year. That's not what this is about. That's not what we're doing here. You want that action, go over to the live trading room. This is a system that is supposed to be passive, and it's supposed to have risk protection built in place. So the market's always going to outstrip us when it goes on a tear to the upside. Here's why I'm really, really excited for the second half of the year. 1, I just don't think that that trend is going to continue with the marketplace. I think that we are in store for some weakness in the market going into the second half of the year. I've laid out my reasons for that in the live trading room over and over again. But the other reason is right here. Again, this is pretty impressive that none of these positions, and when I say none, I mean none of these positions right now are being threatened, meaning they're getting pushed in one way or another to where we would have to roll them. All of these positions are absolutely fine. These are both in the money, but we want these to be in the money. These are our two best trades that we have going on right now in the portfolio. So nothing's being threatened here. We've just gone through an expiration. I've got $11,000 that I need to put back to work next week in my portfolio, and we are over the $300 a day theta goal that I have. Remember, for me, with about my $67,000 portfolio, it takes me getting all of that money put to work. It takes me getting down to a $1, $2, $3, maybe $4,000 available buying power to be able to get up to $300 of daily theta. We're there now, and I've still got money to put to work. So that's huge. This is perfect. I love the negative delta. It's not too negative. Just last week, this was too negative. We were too bearish in the portfolio. And of course, that's been rectified by the 2 last days of downturns in the marketplace. But number 2, theta looks absolutely amazing. Now look, that doesn't mean that every single day next week, it doesn't mean that I'm going to have $300 times 5 days. It doesn't mean that I'm going to be at $1,500 at the end of next week. But it does, because obviously delta and other things affect the results of our portfolio. But this is amazing. This is absolutely just picture perfect. I think I can get this well above $350, $360 a day next week when we start putting this capital back to use. This is the big one, though. I've still got $12,000 of extrinsic sitting out here, and so if you rank our positions based on extrinsic value, and you say, okay, well, here's where all the money sits. Here's where all the profit potential in these positions sit. Number 1, how realistic is it that that money comes into us? How realistic is it that this $5,055 on NVIDIA moves from the extrinsic part to the open part to our wallet? And then number 2, and this is maybe just as important a question, when is it coming in, right? So let's say that I say, oh, look, guys, it's guaranteed. No worries. It's guaranteed this $5,000 is coming into our pocket. Well, what if I'm out 4 years on my expirations here? Well, then it's not quite as impressive, right? It's still great, but the ROI, of course, gets really affected by how far out you are. So I feel really, really good. As you go, I won't take the time again to go through these because I've already gone through them over here, but the extrinsic value that we have in this portfolio, there's not one single position in here with that extrinsic, attributable to that extrinsic value. Obviously, we don't have extrinsic in the things that we actually have taken positions in, but this amount that is attributable to our positions that are still open and working, I have 100% confidence, not 99, 100% confidence that that all comes in. And all of these, NVIDIA is the furthest out in the middle of December, but all of these come in this year. So I'm talking about another $12,000 on top of the $5,000 basically that has come in now. That's basically $17,000. Now let's look at the calculator just quickly once again. $17,000 coming in on a $63,000 starting point for the year. That's about 27% return. Guys, and that would be, you know, at the APR at the end of the year, 27% return. And that is not assuming that we ever put another single trade on this year. Obviously, we're going to put more trades on this year. You can't predict, you don't know, but I'm looking at this second half of the year and I'm saying, look, I don't think the S&P turns in another result in this second half like it did in the first. I just don't see that happening. It obviously could, but probabilities, you know, we want to talk with math. I don't think probabilities say that it won't. And number 2, I think that obviously it's not a huge challenge. It's not a huge goal to set, that beyond what we already have working here, that maybe we could bring in another 10% return in this. I would be very disappointed if we get to December 31st of this year and we're not up 30%. in our portfolio this year again. And that would just absolutely be, again, another stellar knockout year, regardless of what the market does, regardless of what it does. So I'm not saying that we're going to bring in 30% this year, not predicting that, but I can certainly see it in the cards, and it certainly wouldn't surprise me if that happened. So these numbers are very important to me. I continue to watch those on a daily basis. I hope that helps you guys maybe understand a little bit more about what I look at in these portfolios. Hope you're having a good week.